PayPal reported quarterly financial results on the morning of Tuesday, October 29th, 2024. That sent the stock price lower as much as 8% before recovering, and it's now trading down roughly 3.8%. I'll review these latest financial figures and highlight the things that investors were not happy with, the things that are causing the stock price to fall. I'll also highlight the good things that came out of PayPal's recent quarter. There was a lot to like as well. And then I'll update my buy recommendation for PayPal stock. Remember, I've had PayPal rated as one of my top stocks to buy this year, and it's performed really well so far in 2024. And that's partly why the stock price is down following this earnings release, because it had run up so much coming into this quarter that it was due for a pullback if the company didn't report continued excellent numbers. So I'll share that with you here, and I'll update and let you know whether or not I still think PayPal is a top stock to buy right now. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, like I highlighted, PayPal stock price volatile in trading following the earnings release. You can see it falling as much as 8% before bouncing back up to being down 3%, and it's now down about 3.8% on the day of the earnings release. The company is raising their full year non-GAAP guidance, and they say they are pleased with the strength they are seeing across the business. We've built a solid foundation in this last year that will serve us in the years to come, said the CEO, Alex Chriss. Remember, Alex Chriss is roughly 1 year into this job as CEO, only recently coming in towards the end of last year. So that's what he means by saying, we're laying down a foundation for growth here since I arrived at the company. So net revenues in the quarter increased by 6% to $7.8 billion. Investors were expecting a little bit more revenue growth given that the company was forecasting better growth and that it had achieved better growth so far year to date in 2024. And the third quarter overall economic activity was strong. So investors were expecting maybe better revenue numbers from PayPal. Transaction margin dollars increased by 8% to $3.7 billion, and GAAP operating income increased by 19% to $1.4 billion. So revenue going up by 6% led to operating income increasing by 19%, a more than 3x increase. That demonstrates the asset-light business model. That demonstrates how lucrative this business is and explains why I've rated this stock as a top stock to buy. The difficult work for PayPal happened in the previous couple of decades as it worked to attract merchants and buyers to adopt its payment platform. Now that it has over 400 million active accounts, the most difficult part is behind it. Still, growing that business on both sides of the equation remains a challenge, and that's what PayPal has to work on because it's a positive virtuous cycle. The more people it attracts to use its payment platform, the more businesses will be interested in having PayPal as an accepted payment method, and that will just feed on itself. The more businesses that accept PayPal, the more people will want to use PayPal because they'll notice it being available at more establishments. And so that's the part of business that I want PayPal to focus on, and that's the part that I think management knows it needs to work on. Operating profit margin expanded to 17.7%. That was up by 198 basis points. Payment transactions per active account on a trailing 12-month basis increased by 9% to 61.4. And PayPal has been achieving this for several consecutive quarters now, where each account is using PayPal more often. They've focused on more valuable accounts, more profitable accounts. And for a couple of quarters last year, they experienced declining active accounts because management was more focused on profitable accounts. They weren't incentivizing those dormant accounts to come back and make a transaction and try and get them to use the platform more often again. But that would cost the company some promotional dollars to do that. Instead, they said, let's not focus on these unprofitable customers that, sometimes or rarely use PayPal. Let's go after those customers that are more valuable to us, those customers that we can serve better. And after a couple of quarters of declines, PayPal is now on a several consecutive quarter streak where it's adding millions of new customers. And in the most recent quarter, active accounts increased by 0.9% to 432 million. But on a sequential basis, they increased by 2.6 million. So from the previous quarter, they added 2.6 million active accounts. That's a great number, especially if you consider that they're focusing on more profitable customers. So this is 2.6 million higher quality customers that were joined, that were added to PayPal. And that's really good number for PayPal stock investors. Cash flow from operations came in at 1.6 billion and free cash flow came in at 1.4 billion. Again, this highlights the asset-light business model. They generated 1.6 billion in cash flow from operations and free cash flow was 1.4 billion. The difference between these two numbers is capital expenditures, which if you do cash flow from operations minus CapEx equals free cash flow, you'll see that CapEx is 200 million here. They don't have to spend so much on the platform. They don't have to spend so much back into the business to facilitate growth and continue expanding. That's not how this business grows. This business grows more so by attracting new merchants and attracting new customers. And they can do that in several ways that doesn't require significant capital expenditures. And if you compare cash flow from operations of 1.6 billion to the net revenue of 7.8 billion, you'll see the company generates a strong cash flow from operations to sales ratio. All right, so now for the bad news. One of the numbers that had investors concerned and sent the stock price lower is that the company is forecasting for the next quarter that earnings per share will decline by low to mid single digit percentages. And the company says that this reflects elevated marketing spending to support key initiatives and new products. So that was something that investors were a little bit concerned with, especially because they are forecasting revenue growth, low single-digit revenue growth. And this reflects the impact of price to value strategy and prioritization of profitable growth. As I highlighted earlier, the company has focused on profitable growth. And when you focus on profitable growth, sometimes that leads to slower growth because you're going after, you're more selective in the customers you're going after. And so you're casting a smaller net, and that's bringing in fewer customers, and that could lead to lower revenue growth. And for the most part, I'm usually okay with that strategy. I usually prefer that strategy because a business is not always good at serving all customers. As a business, you have to realize what customers you're in best position to serve effectively. Not every customer is for you. You have to make that choice. Which customers do you want to go after and serve those customers that you can serve most effectively? And that's what PayPal is doing. That's what PayPal is doing. And arguably, that's the reason why the stock price has performed so well in 2024 is those foundational efforts the company put in place last year by focusing on profitable growth and not focusing on just adding new members. So the forecast of decreasing earnings per share is concerning investors. Now, this is a result of an increase in marketing spending to attract more growth. And we won't know the results of this strategy until several quarters down the line. If this strategy proves to be effective, then this concern from the current quarter could reverse very quickly if, let's say, the company says 3 months from now, 6 months from now, if they come out with a statement in their next quarterly release saying that all of those marketing efforts that we initiated in the previous quarter, they're working really well. And we added X million new customers. Each customer is engaging with the platform more often. And now we're upgrading our guidance for revenue and profit. That could be something they say, Or they could come back to us 3 to 6 months later and say, that strategy that we initiated not working so well. We're going to stop that and we're going to try something different. If they do that, then that could disappoint investors even more. Regardless, we don't have a lot of history here with this new CEO. So it's not like I can say, well, this CEO at PayPal has done a great job with marketing spending over the last decade, so I can be reasonably confident that this is going to work out. I can't say that because I don't have that history with this CEO with PayPal. And so those added risks and uncertainties usually lead to a price decline, which is what we're seeing with PayPal here. Still, the stock is trading at a relatively fair valuation at a forward price to earnings of 16.6. I think the price is fairly valued. I don't think it's very much undervalued anymore. And so thinking about my recommendation for PayPal stock, I had it rated as a top 10 growth stock and a top 25 stock to buy all year long in 2024. Following these results and following the company's valuation increase, I'm downgrading PayPal stock by one notch. I'm now just rating it as a buy. It's no longer on my list of top stocks to buy because of the comparison between the expectations and the valuation of the stock that has gotten, elevated given the excellent performance so far year to date in 2024. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.